Hey everyone, I'm Jun, a researcher with Dxpert. Once more, artificial intelligence takes the spotlight again as Dell unveils its earnings report, triggering a rapid surge in the share price. Let's delve into what it means for us as investors moving forward. Dell Technologies combines both server and consumer businesses, and it was the former that buoyed investors following the release of the vendor's quarterly report, sending its stock price up nearly 20% in after-hours trading. Dell's management literally stated that the demand for AI servers is many times greater than the existing order portfolio, which is also actively growing. In 2024, Dell has continued its impressive performance from the previous year, with shares soaring by 90% compared to the S&P 500, 24%. Investors' enthusiasm for AI-led computing ventures has been a key driver, propelling Dell's shares up by 6% year-to-date, outpacing the S&P 500 4%. This surge in AI investments contrasts with subdued enterprise spending, which pose a challenge to the recovery of traditional IT markets such as PCs, general-purpose servers, and storage. However, Dell faced competitive pressures and potential margin softening due to a greater mix of lower-margin AI server sales. Although its PC results faced challenges, the strength in the storage segment helped offset the impact, resulting in modest sales upside. Despite ongoing softness in general server demand, healthy AI servers demand contributed to sequential growth, with orders increasing by 40% and a backlog standing at $2.9 billion, a significant increase from the previous quarter. We are closely watching Dell's fiscal year 2025 outlook, which is expected to influence market sentiment significantly, especially in the AI server segment. The company has set a lofty 5% sales growth for the year. Positive aspects of the outlook include the robust momentum in AI infrastructure investment, supported by improving GPU supply, which could translate into stronger revenue growth, despite the possibility of gross margin moderation. And improving operating margin trajectory is anticipated, driven by revenue recovery and operational efficiencies. Additionally, the roll-off of the low-margin VMware business is expected to lead to a slight decline in total revenue year-over-year, but is seen as setting the stage for higher quality earnings and supporting margins and earning improvements. Expectations regarding AI orders and backlogs are nuanced, with Dell's strong track record in leveraging improved supply to drive AI servers revenue expected to continue, although the AI backlog is projected to remain around $1.6 billion. Incremental AI orders are expected to be less than $1 billion, balanced by a similar convergence of backlog to revenue, indicating a step up from recent revenue realizations. Overall, there is a positive outlook towards the AI-driven compute investment cycle, particularly benefiting branded servers company. Despite mixed drivers for other businesses influenced by macroeconomics factor, there is greater confidence in sustained growth in Infrastructure Solution Group, positioning Dell for double-digit earnings growth as it navigates past macro pressures on PCs and general-purpose servers. While Dell may not be perceived as the primary beneficiary of the AI investment cycle, it is expected to benefit along with other servers company through the sales of higher-end servers, leading to increased average selling price and margin improvements. One of that other company is none other than Supermicro. Now, Supermicro is a leading provider of application-optimized server solutions. Notably, the company has made significant strides in the AI server market by providing NVIDIA and AMD GPU-based servers. Key takeaways from NVIDIA recent earnings report shed light on the AI server space. Firstly, there is strong demand for the new B100, with supply struggling to keep up, particularly for new GPUs product. Inference now accounting for 40% of NVIDIA's trailing 12-month data centers revenue, exceeding previous expectations. However, there are slight headwinds on the horizon, primarily attributed to potential competition from AMD, leading to some concerns about gross margins. Anticipating Supermicro's trajectory, we expect the company to further expand its market share with the swift introduction of new GPU products like the H200 and B100 in the upcoming months. Additionally, Supermicro is well positioned to ship servers based on MI300 and Gaudi 2 architecture from the second quarter of the calendar year. The growing demand for inference is also likely to benefit enterprise-focused companies such as Supermicro over Asian original design manufacturers or ODMs. The primary strength of Supermicro leans in its rapid time-to-market capabilities, which serves as a significant competitive advantage. As the AI landscape evolves, this advantage becomes more crucial. With NVIDIA increasing its new product launch frequency, Supermicro stands to benefit by promptly aligning its offering and providing design assistance. This contrasts with competitors who may lag behind in responding to market shift due to slower design and product cycles. Supermicro's focus on AI is evident, with GPU and rack-scale AI servers estimated to account for over 60% of the company's sales in the second quarter fiscal year 2024. Notably, a substantial portion of Supermicro's purchases is from NVIDIA, indicating a strong partnership and significant reliance on NVIDIA's technology. While concentration risks exist, particularly with key customers like CoreWeave and Meta, Supermicro's strategic positioning in the AI space presents opportunities for continued growth and market leadership. Just like any other profitable industry, competition in the AI server market is intensifying. Supermicro faces challenges from both traditional vendors like Dell and Hewlett-Packard Enterprise, as well as Taiwanese original design manufacturers such as Gigabyte, Foxconn, and Vivint. Despite this, Supermicro's broad portfolio and engineering-focused culture continue to position it as a leader in next-generation accelerated computer architectures. The company is expanding its capacity, aiming to reach 30 billion in the next 3 years, with a significant portion of this growth coming from its low-cost facilities in Malaysia. During its recent earnings calls, Supermicro emphasized its capacity expansion efforts targeting 5,000 racks per month by the second quarter of 2024, supporting operational sales of 25 billion per annum. The company is also prioritizing the expansion of its manufacturing capacity for direct attached liquid cooling, or DALC. Examining the AI supply chain from upstream to downstream, TSMC provides chip on wafer on substrates capacity, with KYEC conducting most of the testing. Foxconn Industrial Internet, or FII, dominates the production of NVIDIA AI GPU modules, while downstream server companies like Quanta, Inventec, Vivint, and Supermicro are mainly involved in AI servers assembly. FII aims to increase its shares in the AI servers market from 20% in 2023 to 25 to 30% in 2024, while Quanta, Inventec, and FII currently holds the majority of the market share, serving hyperscale customers. Supermicro's shares in the AI server market has seen modest growth over the past year, with its focus on providing total AI solutions. Meanwhile, Gigabyte targets AI startups and Tier 2 cloud customers, while Dell and Hewlett-Packard have lower shares in AI due to limited GPU allocation, primarily serving enterprise and small and medium business customers. With that being said, here are some price targets provided by analysts from various banks for your considerations. Although AI is at the forefront of everyone's thought presently, it's crucial to remain vigilant on the associated risks given the significant rise in share price. Thanks for joining me today. I hope you have gained insights from today's video. Everything I've shared are information that I've picked up and learned, sprinkled with a bit of my own takes on things. When it comes to trading or investing, do your own due diligence and be mindful of the risk. If you find this video helpful for your research, please subscribe, share, and like it. Quickly access to all our channels by scanning the QR code. Take care, and I'll see you in the next episode.